US stocks kept rising last month, just like the temperatures as we head into spring. And just like a sunny 70-degree day in February always puts me in a great mood, so does reporting on a strong stock market. Hi, I'm Trent Sparrow. I'm the manager of impact investments at Wespath. Thank you for joining me for our Markets at a Glance video recapping February. Last month, the S&P 500 index of US stocks rose 5.3%. The tech-heavy NASDAQ climbed 6.2%. The S&P 500 and the NASDAQ established their highest close on record on the final day of February. This came in response to inflation news. But it was more than just a good day. US indexes have enjoyed a great start to 2024. Artificial intelligence and technology companies continue to drive the indexes higher. We'll have more about AI and inflation in just a moment. The MSCI ACWI ex-US IMI, an index of non-US stocks, gained 2.3% in February. It was a different story for bonds last month. The Bloomberg US Aggregate Bond Index dipped 1.4%. In February, NVIDIA's CEO declared the emergence of a whole new industry around generative AI, technology that can create text, audio, images, and video. OpenAI, the maker of the popular ChatGPT, was again at the forefront. It demonstrated technology that turns a text description into an AI-generated video that looks like something from a big-budget movie. Excitement about AI has spread beyond Silicon Valley, as demonstrated by our chart of the month. An estimated 36% of S&P 500 companies mentioned AI on their earnings call for the fourth quarter of last year. AI can help companies automate time-consuming tasks, and it can be used for predictive maintenance, among many other things. However, it's also important to note that the rapidly developing field of AI raises concerns about misuse and misinformation. And the worries are not just hypothetical. Google's AI chatbot came under scrutiny when it created images of people of color in German World War II military uniforms. In response, Google temporarily prevented the chatbot from generating images of people while it worked to address these issues. Finally, to inflation. The Core Personal Consumption Expenditures Price Index, the U.S. Federal Reserve's preferred measure of inflation, was a bit of a mixed bag. The inflation gauge measures how much consumers pay for goods and services, and changes in those prices. But it does not consider the costs of food and energy because those prices tend to be volatile. Core PCE was up 2.8% from a year ago. This was a positive development because the annual measure was down 0.1% from the prior month. On the other hand, Core PCE rose 0.4% from the month before. It was the largest increase in a year. This spike highlights the Fed's warning that the path to stable 2% annual inflation may be a bit bumpy. I would encourage you to check out our monthly investment report for February to learn more about potential market drivers, U.S. economic growth, and how the market impacted our fund performance.